I'm here with Jakob from CEO and co-founder of Clearpool. Jakob, thank you for this interview. Welcome to Korea.
Sunny, very nice to be here.
Okay, well, let's dive in. Maybe quickly, can you introduce yourself and what you do at Clearpool and what Clearpool is about?
Yeah, so about myself, my name is Jakob and I'm the founder and CEO of Clearpool. My background personally is in fintech. I was the head of growth of one of the largest fintechs in Southeast Asia.
Yeah.
We did a digital bank for companies, and we also did all sort of lending opportunities for everyone basically left out from traditional banking.
Okay.
And it was then when I discovered, I would say, the blockchain and DeFi around 2020, DeFi summer.
Yeah.
And I realized there was this new technology, programmable finance, and you could build different lending products with it, inspired by the likes of Aave, Compound.
Yeah.
We realized there was a gap in the market. The gap was private credit, so companies that do not have on-chain collateral,
Right.
but companies that are still credit-worthy and want to source capital. So we set out in 2021 together with my two co-founders to start Clearpool. Clearpool is a on-chain private credit marketplace where different types of companies can source liquidity. We initially focused mainly on trading firms, but currently we have a big focus on stablecoin enabled fintechs, especially those that basically use stablecoins in their everyday operations. Big focus is payment financing. We're around since 4 years now, and we've done roughly $900 million worth of loans, which is making us one of the largest players in this category.
So as you said, you come from fintech background. You've been at Rocket Internet Ventures like Foodpanda and Zumia, later at Aspire, as you mentioned, Southeast Asia's largest digital mail bank. And what did you learn from those experiences that you think prepared you to build this decentralized credit marketplace?
Yeah, so I think generally, I lived in quite a lot of different places. Previously, I even lived in South America for a university exchange semester. I worked and I built companies in several markets, especially emerging markets like Eastern Europe, the Caucasus area, and then Southeast Asia. And then later, building out one of the largest digital banks for the region. I think, one obvious big learning was I really got to understand the traditional current banking infrastructure. And not saying that everything is bad, but when you do when you set up a neobank between different countries, you do clearly see what are the difficulties.
Exactly.
Right? So if you transfer money from different countries, especially emerging markets, it is a headache. You have a lot of different intermediaries in between, and if you're able to actually put in the right information, you might send the money. It takes several days to arrive.
Sure.
Sometimes it bounces. If it arrives, it takes several days, and they charge you a lot of money on the FX, right? So I think that was one of the big realizations that our sort of like legacy banking rails with the SWIFT network, or also with acquiring banks and MasterCard, Visa, is a little bit outdated now in 2025. When we have stablecoins. Stablecoins obviously probably the biggest product market fit in crypto we have, and stablecoin, the main use case is it allows instant settlement of transactions without any intermediaries, which is a fairly, I would say, simple concept, but it is extremely powerful because now you can send money across the world within a second or even less at basically no cost. And that is really disrupting the current payment world, actually.
Thinking about, I think, PayFi, it's payment financing, obviously. Can you explain in your own words, what is PayFi and why now?
Yeah, so PayFi is short for payment financing. And basically what PayFi enables is instant settlement of transactions that otherwise have a fiat lag involved that takes several days. Okay? So once again, if you send money from Hong Kong, which is where I'm from, to Brazil, and you're using the SWIFT network, it takes several days for this transaction to settle. it takes several intermediaries that are involved. Each of those is taking a cut, and you're also going to be charged quite a lot of money on the FX rate, right? So overall, it takes a long time and it's very expensive. Now, what stablecoins enable is they enable a way to send to facilitate these transactions in a much quicker way, because you can send the stablecoin to the destination country immediately, and then basically off-ramp it. So a transaction that otherwise takes multiple days, now with stablecoins you can facilitate immediately. Before stablecoins, there were already a lot of cross-border payment companies. I think the biggest one that probably most people know is Wise, former TransferWise. They already had a solution that was called pre-funding. Pre-funding means you have capital in all the different currencies, in all the destinations, right? So if you receive the money in Korea, you send it. Basically, there is the money in the destination country, and then you can release it, and then you net it out. This already works, but it is very inefficient because you need to keep a lot of money in all the destination countries. And stable coins, you can send the money wherever it is required, and you can make this a lot easier. So PayFi is basically extremely short-term receivable financing. Where you can, finance transactions in a and make them immediately available.
So I see why Clearpool decided to build PayFi, and you mentioned about the broken system in the international payments. Where exactly do you see the biggest pain points in today's payment system? Is it the cost of the cross-border transfers, the delays, or something else that you could
I would say it's both, right? One piece is obviously time, and time is also money, right? So if you're a company and you need to wait a couple of days for payment to go through, this is time that basically is lost, right? And this is resources that are basically lost because you need to wait for a couple of days for the transaction to settle. The second piece, however, is cost, and making transactions even slightly cheaper makes a big difference for companies that are operating on very tight margins, right? As an example, credit card payments as well, right? Credit card payments are still taking 2 to 3 days to settle, and also the cost of a credit card payment is anywhere from 2.5 to 4% for a few providers like American Express, right? Now, many small businesses, operate on very tight profit margins. So if you can improve those profit margins by a few percentages, that makes a huge difference for these companies. So I think the interest, and another aspect is that in the developed countries, the SWIFT network is already quite quick, right? But it is really the emerging markets where this is even the bigger pain points, and this is why stablecoin adoption is the highest in these markets, and this is why people and companies in these markets are the ones that are benefiting the most from this new sort of payment financing innovation and stablecoin innovation. As a result, also stablecoin adoption is the highest in these markets. So I see stablecoins and payment financing really like a equalizer that basically reduces the costs that these companies have to pay compared to companies in the more developed countries, and in a way it levels the playing field for this type of people, both people and companies.
PayFi, according to some stats, are framed as $1 trillion industry. How big is the opportunity? Can you quantify the size of the working capital gap you're targeting? So what segments offer the most growth? Remittances, processing on-off ramps?
Yeah, so payment is obviously a huge industry, like a multi-trillion industry, and cross-border payment will be the biggest market that we are currently tackling. Other applications, as already mentioned, are also card payments, and also anything that is related to on and off ramping and OTC payments, etc. Now, while on and off ramping is still, I would say, relatively small, as the crypto industry as a whole is still relatively small, but it's growing very, very quickly. Payments, especially cross-border payments, is obviously the huge opportunity right now, and that is affecting every single country. And also a lot of foreign workers who are sending their money to their like home countries, basically.
I want to get into maybe the mechanics of the PayFi credit pools. So how do PayFi credit pool operate? What makes short cycle, high velocity credit viable on chain?
Yeah, so I think there was a lot of efforts into bringing private credit and then like real world private credit, on chain. There has been a lot of different efforts, but the reality is they were not very successful. And the main reason is that normal private credit opportunities are highly illiquid. So you can, like a normal private credit fund, usually has a minimum lockup of 1 year. Right? And why is that the case? Because the underlying financing is usually at least 1 month, very often multiple months, right? If you're financing trades, like real world trades, or if you're financing real world invoices. Because the underlying is very illiquid, or loans to companies that are 6 months, etc., 1 year. If you're tokenizing it, then you have a tokenized private credit asset, but it wasn't a really good match with DeFi. Why was it not a good match with DeFi? Because the power of DeFi is to utilize those assets within the DeFi ecosystem. And if you have something that is highly liquid, it's very difficult to find someone to make a market for it. Right? It's very difficult to have more liquidity for something that is so illiquid.
That's true.
And it's very difficult to use these assets as collateral in a lending market. Because the assets that are being used as collateral in a lending markets are usually crypto assets, like Ethereum or Bitcoin, right, that you can sell immediately. Now, PayFi is really, we see it really as the big opportunity to finally bring, real world private credit, which is, non-related to the crypto market, onto DeFi. And why is that? Because, PayFi itself is very liquid. Once again, you're financing bank settlement times, usually 1 to potentially 5 days. In comparison to financing several months. As a result, we can structure these products in a way that lenders can get their money back within a few weeks versus within a year. And as a result, we can basically construct a product that has already liquidity by itself, because some of it is being deployed into highly liquid assets. But even the underlying PayFi opportunities are quite liquid, and therefore we can make markets for these products. Right? We can create a DEX market, and therefore we can also create lending markets. So you can actually now utilize a private credit tokenized asset, and you can use it on a lending market. You can use it as collateral to borrow against it, and then you can reinvest that. Right? So basically the same thing that people did with Ethena as USD, we want to do with our PayFi product. We call it cpUSD. And ultimately what that is going to bring you is it's going to bring you better capital efficiency and more returns, because we add leverage. And I think this is a big game changer. It's very interesting for DeFi native users, because the basis trade is great, but it only works in a bull market, right? It only works if there's a lot of liquidity. A lot of liquidity. This only works if a lot of people are trading, right? And if we enter a bear market, then crypto native yield usually converges, very low towards zero. While here we have a yield that is non-crypto related, and also we have a yield that is very attractive, right? Currently yielding around 15% or even more. So very attractive for crypto native users. But especially we see this as the big opportunity to bring traditional capital into DeFi, because traditional capital very often they understand, receivable financing, they understand private credit, but so far there hasn't been any advantage of doing this on chain, right? Because there was no liquidity. Now we're bringing the product and the concepts that they are already quite familiar with. We're bringing this on chain, and we allow them to basically access more capital, via lending opportunities, via using this as collateral. And as a result, they can achieve higher returns. And I think that's the big unlock here. The important thing is that a tokenized private credit asset needs to be better than a non-tokenized private credit asset, and that's what we're trying to achieve here. And that's a huge opportunity that we think is much, much bigger than the current sort of like crypto native
DeFi
products.
Right now, Clearpool is positioning itself as a credit layer powering PayFi. So you're aggregating capital from retail and institutional lenders. So what, in your opinion, what makes Clearpool's approach different from other DeFi leading platforms?
Yeah, so I think, as mentioned, right, we are really focusing on companies that use stablecoins within their regular operations.
cpUSD.
And we are focusing on real world companies, basically, right? So the yield is not derived from trading, right? Like crypto trading products, but the yield is actually derived from financing, in this case, real world payments, right? Or in other case, sort of like any type of receivable financing, where stable coins have an important role. I believe we are quite uniquely positioned, as mentioned, to bring real world private credit into DeFi and really create use cases around it and have adoption and traction from both the crypto natives, but also traditional capital.
How about, can you give us some size of the loans you're currently occurring using stablecoins, and maybe like explain about maybe compliances that you are putting together?
Yeah, so overall, we have so far executed, handled $900 million worth of loans. We have been working with different types of companies. We have been working with Web2 fintechs, and we've also been working with large trading firms, crypto native ones such as Wintermute, to also large Wall Street firms like Jane Street, for example, used to be our largest borrower. They had a loan of $50 million, and other borrowers such as Flow Traders, it's a publicly listed company. As a result, obviously, we are very, very focused on compliance and making sure that our sort of like loans adhere to the best possible compliance standards.
Let's talk about cpUSD. So what is cpUSD? Is it permissionless, yield-bearing asset appropriate for the retail?
Yeah, so we basically have two main products. Right? On the one hand, we have a marketplace called the institutional marketplace, where we have different borrowers, and then as a lender, you can choose which borrower you would like to fund. This product appeals very much to institutional investors because they like to make their due diligence on every single borrower, and they might favor one over the other. And they have the capabilities to understand these different borrower profiles. Right? Just like if you are a professional asset manager, you're most likely gonna want to pick your own stocks. However, if you are a retail investor, right, except in Korea, because I know Koreans are very savvy and they really like to trade on the stock market themselves, but a lot of retail investors, they might prefer a ETF-like product that gives you a diversified exposure into different assets. And obviously diversification, we all know the benefits, right? It lowers the risk and it gives you like a blended rate. And this is why cpUSD basically gives you a diversified exposure into different assets. Now, the other big piece is duration. While the individual loans, have a duration, and we know that institutional investors are okay with a lockup of maybe like 1 month or a couple of weeks or sometimes even a couple of months, retail investors or like the crypto native investors, they want to have a product that is more liquid. This is why besides different lending opportunities, the cpUSD product also has a part of it kept in highly liquid assets that can be redeemed immediately.
Okay.
The other big piece about cpUSD is that we are concentrating liquidity in one yield-bearing asset, and we are creating secondary market for those assets, and then we're also creating DeFi use cases for this asset. So this asset is going to be available within DeFi, within different lending markets, and you can then participate in different strategies with these assets. The idea of cpUSD is really to make a actually real world private credit asset look and feel a lot like DeFi and have the use cases of DeFi.
Do you think you can maybe go through like maybe the technical part of it? For example, like how depositors mint cpUSD, via the ERC 4626 vault.
Yeah,
and
so
how the yields are derived.
Yeah. So as a user, I can simply deposit stable coins, multiple stable coins, such as USDT and USDC, and in return, I will receive a receipt token. And this receipt token, I can then utilize with it as collateral, for example, on the lending market.
Okay.
On the other side, the stable coins, the liquidity that is sourced via cpUSD is then deployed into different lending opportunities with different borrower profiles.
Okay.
The borrowers then are taking the stablecoin liquidity in order to finance different transactions and generating yield, and are repaying the yield back into the pool, which is then coming back into the cpUSD, into the yield-bearing asset.
Okay.
Once again, part of the liquidity is kept in a highly liquid yield-bearing asset, such as a tokenized T-bill that is still yielding 4% right now and can be withdrawn immediately. So overall, this cpUSD has a very interesting return risk reward profile, right? Backed by, I would say, very good credit and very interesting yield, 15% plus. And at the same time, there is a part of it that has a lower yield but is highly liquid and highly secured, such as tokenized T-bill.
So let's talk about Clearpool's roadmap. Clearpool has said it is the liquidity behind the liquidity.
Yeah.
So what are your key milestones in the next 6 to 12 months, say?
Yeah, so we believe that stable coins are gonna replace traditional banking rails, and we think that there is now a lot of new fintechs in the market that are probably also gonna replace some of the I would say traditional financial institutions. And these fintechs, they are powered by stable coins. And our mission is to provide liquidity to these fintechs. So then these fintechs then can basically provide liquidity to the market. This is why we say we are the liquidity behind the liquidity.
I understand.
The vision here is that we really want to be a very comprehensive marketplace where we provide different stablecoin lending solutions to all types of different companies that are basically running on stablecoins and require stablecoin financing. This is why payment financing, PayFi, is just the first big focus that we have, because we see that this is right now a big use case. But in the future, all the companies are going to run on stablecoins. So technically, every type of fintech and every type of company is a potential borrower on Clearpool. Credit is really the fuel of any economy, and this is why credit on chain is going to be a huge opportunity that is currently still relatively small, but we believe it's going to be the largest opportunity there is in the whole DeFi and RWA space.
Great.
You will see more products, more types of borrowers on Clearpool coming on chain, and you will see that we're going to build out a whole ecosystem of different partners. They're going to utilize our yield products to build different strategies on top of them. The idea again is tokenized assets should be superior than their traditional counterparts. So far, RWA hasn't achieved that, but I think right now with the big stablecoin adoption, we're really at the verge that this is going to become a reality.
So as you said, stablecoins are becoming the core infrastructure for remittances, merchant rails. How do you see the broader payment landscape evolving over the next few years, and where does Clearpool fit?
Yeah, so once again, we see the biggest, most obvious use case right now is cross-border payments, especially with markets that have, I would say, relatively less developed banking infrastructure. That's the big use case. That is where stablecoins are really improving things drastically, and this is why I was just as I mentioned, right, I used to do an exchange semester in Brazil many years ago.
I can imagine the exchange.
Yeah, and Brazil, unfortunately they had a currency, the Brazilian real, that was relatively weak and depreciated to the US dollar. I was recently talking to my friends and I realized that a lot of them, they're not crypto natives like myself, right? They're not investing into Bitcoin, XRP, etc. But they're already utilizing different applications that are powered by stable coins, right? And different companies, they're already utilizing stable coins to settle, their global payments, etc., etc. So the adoption really is the highest with emerging markets and cross-border payments. But slowly, the adoption is also shifting towards more developed countries, right? We see the largest, I wouldn't call them fintechs, but like financial tech companies in the space like Stripe, PayPal, they are very much entering this space as well, right? I think Stripe is developing their own blockchain. PayPal has their own stablecoin. All of them are doing big acquisitions in this space. So it is very clear that also these type of companies, the largest, most advanced companies, are seeing stable coins as really the future of payment technology, and therefore we think that it's actually going to go quite fast. That stable coins are really sort of like going to disrupt the payment space. Obviously, it's not going to happen overnight. Whenever we get excited about a technology, we always think that everything happens immediately. But I would say that more has happened in the last 1 year than previously in the last 10 years. So it's really stable coins and stable coins in payments and tokenization as a whole is really accelerating significantly right now. Also, there was regulatory clarity around stable coins. So you always, especially in the US, with the Genius Act, but also in other places like Europe or Hong Kong, where I'm based in, you have now regulatory clarity, and that obviously sets the stage for the big firms to get involved, to issue their own stable coins. Clearpool, as mentioned, we see ourselves really to basically as a credit marketplace for anything stablecoin related. Currently, big focus on payments, but we're not just going to focus on payments. We're going to focus on the whole spectrum of credit. And as more and more companies are coming on chain, stablecoin is going to probably be the preferred solution of people to source liquidity.
I must agree with you, Jacob, because tokenpost has been around for 8 years, so it's a long time in blockchain industry. I've been seeing people come and go. But recently, as you said, in the last year, there's been a lot of progresses and changes. And I think one of the reasons is because of people like you. They are coming from the TradFi into this, bringing the knowledge, changing the traditional guys, influencing them, the policymakers. So having said that, is there one thing you like policymakers, everyday users, to understand about PayFi? What would it be?
I think just generally, not just about PayFi, but like tokenization as a whole. I think the key aspect I would say that should be understood is that there are multiple benefits, right? There's obviously the benefit of efficiency gains, right? Of issuing an asset or a loan on chain, but we see the big unlock, right, is really composability, right? Utilizing these tokenized assets and then being able to move them around easier and being able to, have much higher, capital efficiency and using any asset you or a company owns basically as collateral. This is something that is a big unlock, and this is something that significantly improves the status quo versus just some efficiency gains that are obviously also a good advantage, but I would say they are not a complete game changer to the system. I think regulators need to keep that in mind when they design regulation, meaning that it is very important that you can actually utilize the underlying assets within this system that we created. Now, compliance is obviously important and it's not going to go away, but we need to find a solution that fosters innovation and while obviously adhering to compliances. But whenever you have new innovation, sometimes the borders are relatively blurry, and the innovators are the ones that are pushing those borders. I think right now, especially in the US, there's definitely like an administration that has signaled that they are welcoming innovation, and as a result, a lot of founders and a lot of companies are daring to innovate and bring new products onto the market. While previously maybe there was always a big concern of, am I breaking the law basically by doing that, right? And I think that is very important for an innovation such as the blockchain and tokenization.
So, can you maybe share for the last time maybe a message for our Korean viewers in Korea? What we should look forward to at Clearpool? Yeah, so
I mean, I'm very excited to be here in Korea because obviously, Koreans are known to be, a very blockchain savvy country. And I think, what we're doing is, I know that, for example, XRP, I think, has a huge community and a lot of followers here in Korea, and the vision behind XRP obviously was always to facilitate cross-border payments, and I think that is also what our vision is, right? We have a different approach. We're basically sourcing the liquidity, providing the credit layer for this like cross-border payments, and we think that the time is now, and stable coins are really the use case for the real world that we've been waiting for many years, so that's why we're very excited to show what we've been building to the Korean market, and we're also working on several initiatives with several Korean players, both on the crypto native side, but also on the more traditional institutional side. We have some pilots and discussions right now going. So we're very excited to increase our footprint in this market, and we want to come back every year to Korea Blockchain Week.
That's great.
And exchange with the local players basically.
And update us with your developments.
Yes.
All right, we have it with Jakob from Clearpool. Thank you very much, and again, thank you for your time in this interview. I hope you enjoyed the rest of Korea Blockchain Week.
Thank you very much.
Okay.
Thanks for having me. Thanks for listening.